Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the range-bound ascending channel of BTC, making its little bit of a push to the upside in the dovish stance by the Powell speaking, letting the charts flow in the way that they will flow and possibly smacking them down later. So let's go ahead and take a look at the liquidity and not waste a single second of your time. What do I mean by the liquidity? Well, we go into high block capital to see that. What is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker, and we get to see where those stop losses and or liquidation points lie in wait. So let's do it now. So we were looking at a possibility of possibly retracing down to this 100x pool of $238 million of long liquidity down here at 34,964. Also happens to be a golden pocket region. We did not get to that zone for whatever reason and started to peel out from that point. And then at this retest level, they induced some more longs to the tune of 253 million as they were eating into the 50x shorts, punishing the shorts yet again. So we were looking at this. Let's just go quickly into the projection from last stream yesterday. So we were looking at a possible bounce off of the golden pocket. It looks like we had an equilibrium bounce. If we switch to that, it was basically at the 0.5 level, just below the discount range, and possibly bouncing off of that region for whatever reason, deciding to just tap beneath the 0.5 region without going into the golden pocket region from this impulse. It's still entirely possible this could be a Model 2 inducement. What do I mean by Model 2? Well, if we go to our entry checklist model here, you do have a possible inducement off the 0.5 where they bounce out here, don't break the impulse and come deeper and get that smooth fill inside of this pocket here. So this is a Model 1 checklist and a Model 2. You can pause the video at this point. So we're possibly getting a shallow retrace to only come back deeper into this to get that IDM, which is inducement. So we could be coming back into this pocket at some point if we cannot break this 886 level and coming a little bit deeper. The point of control of this range also happens to be at this fair value gap. So there's a lot of confluence to come back to. And ultimately you do have this pool starting to get thick with the 253 million and this 238 million. So there are patience of waiting for this zone to get hit, this fair value gap to get reclaimed, is something that could be coming soon. So this theory of coming down to here and reclaiming this pool and this fair value gap could be in the cards. Oops, I don't want to close that out. So we wanted to take, no. We want to take off this thing. And the theory is still true in the sense that we have not broken this range, so this is kind of possibly a double top. It is Thursday, November 9th, midweek reversal day here in Asia, already inbound for the Asian session, hence the title. So we could be coming down to sweep for that Asian goodness. So if we go and start to expand our vision to the higher time frame pools, on the 7-day, we did sweep up into that pool at 35,950. We were talking about the sweep to the 36K region. We were hoping for a little bit deeper of a retrace before they did that, but it is what it is. We go to the monthly. Let's go ahead and see how many of you beautiful people are in the chat. while we load that monthly. So the monthly is the draw to the downside, as you see here. However, if you just ignore what's below and look what's right in the range we're at, there is still some draw to the upside here in the liquidity pools up to 37k. Shorts caking the way up to continue higher. Immediately below is threadbare all the way down to 34k. So unless we drop all the way to 34, there's not much on the 7-day to grab. So it is possible they continue up to that 36.2, 3 and higher on the monthly based on just ignoring everything but what's around the range. Oftentimes I do that to keep eyes on the prize and not pipe dreaming for this 24k draw that is obviously imbalance in the charts. And if we go to the 6 month, let's go say what's up. Hey, what's up, Signify? Thank you for tuning in. I will look at Litecoin when I get through this in a bit. Thank you for always tuning in. So we go to the 6 month time frame. The 6 month is showing that nice pool up at 36.3, still percolating to the tune of $64 billion that they could sweep the highs on and put in a higher high. If we go to the 2 year, it will show that in its entirety up here at 143 billion. We did talk about, well, keep that in mind. There are times where they just leave it alone, just like at 15.2 they left alone this in January or December and peeled out from that point. Or up here in April they left alone some billions here, and then back in July they left alone a bunch of 600 billion nearly, and it took them till October to come get it. So yeah, and then down here in August they left alone some pools down there. So these protected zones don't necessarily need to be swept entirely. And if you look above, a lot of YouTube streamers calling for like 40k, 50k, you know, they're turning on the hype machine, but there's just no liquidity beyond that 38k mark. Just not really much up in here. Just really nothing to draw it there just yet. They have to induce, and even to induce up to this 35k region took from July to now. They had to percolate that pool, make it piping hot, and then spike up in and grab that money, that short money. So the same thing with below, they got to make this piping hot at 24k, and then they'll come get it. And then the gap is where they just have nothing to grab here, so they just gap down to where they need to go. With their manipulation, the 3 phases of the cycle: accumulation, manipulation, distribution. If we go to the monthly yet again to just get things in focus and head back to the charts here, we will go and see what if this model 2 is going to play out. The inducement model, they induce some more down to retrace into the zone and possibly come sweep it. Midweek reversal Thursday is a thing, so if we've been heading a certain direction for Tuesday and Wednesday, we've essentially been trending up for these past 2 days. So Thursday could bring it down a little bit into this region and then run for profit Friday. What do we do from there? Okay, so let's go ahead and take a look at the USDT dominance and whatnot. So we had a little bit of a weird spike here, it looks like, on London, where people got kicked out of their trades for a 15-minute candle or something. That's weird. It's not even on a 5-minute. Whoa, that was odd. So you had some people kicked into their trades in the span of 3 minutes during the New York session, during the FOMC talk, I guess. And let's go ahead and expand this out. So this is a bearish trend-based fib level based on this impulse retrace. You hold the 236 and you're destined to head lower if you hold that 236, which we have. And so people have been able to put their money into trades because the USDT dominance dropping means they're putting the money into trades, not into USDT. And crypto bubbles will also confirm that. You see there is a lot of green on the alts for the day, and if we go to total 3, continuing to rally to the upside. If we turn on our momentum here, link in the description for more, momentummaster.info, and you can scroll down to features, toggle at your leisure to see everything in its glory, the trend cloud, the stochastic array, the baseline, and those nice dynamic alerts keeping you plugged in even if you're at work. So coming to the total 3, coming back above the super trend and the trend cloud here, getting a bit of a rally, putting in some higher highs, just like BTC. The adaptive could be the draw here on the 411 billion, coming up to that adaptive, which we have yet to kiss since back in April of 2022. So wanting to get some altcoin goodness, finally seeing a little bit of an altcoin rally after all of the FUD for the last half a year or so, with FTX and Sam Bankman-Fried being guilty on all 7 charges. There is some justice being served, so that's possibly why there's also a rally in the alts as well. A little bit of confidence restored in the good old world of crypto. If we go to total, you started to get a little bit of a nuke here and percolating extended M pattern. We were talking about how the 6-hour and the 12-hour on Bitcoin was also giving this 2 o'clock angle, and the super trend is on your side, so there's just no reason to short it just yet. Like, the more probable short would be something where you break the super trend, then you bearishly retest the cloud, and then you continue down to here, and then finding that kind of idea for a market reversal is more probable than trying to snipe tops, although these top sniping insinuations will have you at hello with the baseline crosses and whatnot. Let's go, speaking of which, let's go to the 3-day. The 3-day has been pretty strong since our cross up event over here on September 16th. We've been holding these baselines to the upside. They show no signs of abating just yet. We reclaimed this fair value gap / range bound region, and we could be coming into the vector over here on the 3-day at 1.452 trillion. We do have some gaps down here to retrace into at some point, which would also be a SR flip idea over here for total. Looking at what happened with Dixie getting a continuation of that retrace down into these levels. This would also be a SR flip. You did get the cross down event on the Dixie about on Friday, October 13th, as markets were reversing. We could be getting this draw at some point up to that level. This could just be a double bottom retest of support, but that's on the 3-day time frame, quite some time from now. Let's make our descent through BTC's time frames and get a picture as clear as can be. So here we go. So on the 3-day time frame, we were talking about how you have this draw to the adaptive, similar to what we just saw on the total 3, where you come up to this adaptive moving average. That's also readable on the adaptive feature on the website. This is a stable yet sensitive moving average. You can read more about it. It was not invented by me, but just found to be backtestably true at the value I've found. It's a Kaufman adaptive moving average, KAMA. You can read about that in your free time as well. And coming up to this also happens to be this pocket region for the retrace idea that we're currently at. So we could possibly come up and sweep that and get rejected off the 3-day at some point. The 3-day cross-up event of the baselines was had back in September 13th, and we've been holding these 3-day baselines for quite some time. We're overbought on the oscillators. The average of the Williams coming up to a level here. The money flow and the RSI even Steven together. They could just drift into an extended M and start to make its sideways consolidation to cause these baselines to cross. The last time we saw a cross was over here on July 23rd, and it took a fair amount of time to ensue, and we talked about even then it would take at least 15 days or so for that baseline to come up, the average of the Williams to come to a point where it would get that alarm cross. And sure enough, the alarm cross and the cross down event was the market reversal point for that back then. So the same thing applies, where you still have this drifting higher on the Williams, and it could be another 9 days or so before we see the opportunity for a true market reversal on the 3-day. Going to the daily, going a little bit deeper into the time frames. So the daily time frame has that point of control in this local range at that golden pocket region, looking for that inducement bounce to the upside perhaps. And then we previously got rejected off of this level, but we'll leave it there for now. The angle of the cloud is thick and strong, the super trend on your side, so you're still in a bullish uptrend. Be careful if you're looking too short. You should be thinking possibly about repositioning into longs. We did have previous bearish divergence which played out. Now the money flow is beneath the RSI. What is the money flow? It is this gray line beneath the red line, which is the RSI in the red because it's overbought. And then this money flow beneath the RSI suggests you get an insertion of money, which means a push to the upside. The average of the Williams has been coming up here, and at some point you will get a cross down event which could suppress the price. Is that going to occur here, or is that going to occur later? Let's go ahead and dip into the time frame some more, into the 22-hour, the broken time frame of the 22, which has 2 candles per day, the 22-hour and the 2-hour, and that unsyncopated jazz beat of the 22-hour bleeds through some information they don't want you to see. And so this 2-hour angle here starting to thin ever so slightly on the cloud, but the angle still strong. The super trend on your side about 5.2% away. Baselines, the fat boy baseline above the candle here starting to show a little bit of a sign of fatigue. If the candles close beneath the baselines, you start to see a little bit of a dip. We're talking about possible midweek reversal ideas as we come into the 12-hour. The 12-hour ambiguously holding this range. The money flow beneath the RSI as well, suggesting you get that burst of money into the RSI level, getting that surge up at some point on the 12-hour. And looking into the oscillators on the 12-hour time frame also having the possibility. We had the previous cross down event suppressing for, since this point here to now, about 12 days of sideways action. Are we going to start to see a candle closure to bring this to a possible cross up event? The ambiguousness of this takeoff, we did see a little bit of a suppression of the Williams here since basically Friday of last week, and it's starting to curve back up again, so we could be getting this money flow burst on the 12-hour time frame. Looking at the 6-hour, it's starting to subtly fatigue here in this zone as it provided that subtle support to the upside. We were talking about that subtle support on this oscillator here with the trend cloud You don't want to trade against the cloud, so when the price action is above the cloud, you want to be thinking about possibly longing, and when it's beneath the cloud, you're seeing the confirmation of some shorts. Now the angle is tapering and thinning, but still pointing up, not quite at 3 o'clock. There is no curvature. We were talking about the possibility of curvature here, but this angle has been steady and strong, which is why we're seeing this push to the upside. On the 6-hour time frame, if we start to dip a little bit lower, 4 hour, so the 4 hour looking to double top here, getting a little bit of a push up on the Williams as well. Could have a shoulder head and a shoulder push out of this range into that region. What is the liquidity pool that we could be looking at here? If we zoom in, there is a band of 100xers and coupled with their 50x 25x brethren up here at 36 even, so coming back and sweeping that possibly right now on the 4 hour. If we go to the hourly time frame, the hourly is already overbought. The money flow beneath the RSI suggests we could get a burst. The last time we had that, for example, we had the money flow beneath the RSI here and it burst up. We got the money flow beneath it slightly here and it burst up. So we're still getting that curveball of the RSI money flow disparity here on the gray-white disparity. When the money flow goes beneath the RSI, you start to see this possibility of a surge up. So we could see a pinning of the hourly stochastic. The cloud is mighty thick, and we did, so the level that we bounced at was the equilibrium here. If I go like this to equilibrium, we bounced off the equilibrium, but we dipped a little bit lower. Why did we go into that? That was the hourly cloud. And this is your idea we were talking about yesterday. You have this break through the cloud, you come back, you kiss the cloud, and then you continue. Do I know where it's going to continue? Not really, which is why I put these projections out with the confluence of the math. Down here in this golden pocket region, I was expecting a little bit deeper of a retrace and test of this fair value gap possibility. Did not get it, but this cloud idea gives you a continuation. So if you were to take this and have your runner, you would be able to see how your runner holds up in court. Getting a lot of volume here over the last few days. Since Wednesday, getting a lot of volume spikes on the PVSRA. Right now, a blue stopping volume candle to the upside on the hourly. Coming to the 15 minute looking to continue into a strong daily close. The hourly closes in 4 minutes, and we have a daily close in 1 hour's time. Here, the same thing applies. We came back above the cloud on the 15. We kind of reclaimed it here and we were gone. So everything is fractal in nature. You're seeing this kiss and thinning of the cloud. The thinning is very important because then it means an expansion is inbound. You can read about it in the trend cloud here, that thinning point. This is a schematic of what to look for. This is Bitcoin's absolute bottom during this run from November. So seeing this baseline hold and the cloud hold gives you that insinuation of upside continuation. Same here, we held it, this candle also confirmed, and boom, to the upside. Okay, so where do we go from here? Are we getting a fatigue out at some point in this range? It is midweek reversal. I would expect possibly some sort of manipulation up into these regions, only to come down sharply into here based on what liquidity lurks, and it has been induced without being swept. So they're doing their extended M goodness to possibly come up into these regions and then possibly reverse down. Do they do that within the Hong Kong session in the baton pass to London? That is the question. But let's go ahead and take a look at what you wanted to take a look at. Let's see, Facebook signified, Dingo, APV, yo, what's up everyone? Todd, what's up? Yo, thank you, man. Thanks for stopping in. So you wanted to take a look at Litecoin, LTC, I believe. So let's go ahead and look at LTC. We'll get out of this one and look at the Litecoin, shall we? I think we can look at the liquidity as well. So this is a good thing. LTC, boom. Where's the liquidity lie, first and foremost? Okay, so you had a lot of shorts open up here. We had 3 million long opening up. They retraced down. They did take out that 100x one. So they took out that 100x, 75x, sorry, is the max. So they took out that 75x long guy, but then some shorts opened up to the tune of 3 million. Currently still imbalanced to the tune of 36 million in long liquidity on the 1 minute, although that is lost to father time, so we don't know what was there before. It's only 7 days of information, but still valuable nonetheless. So possibly sweeping into this liquidity to the upside here, coming up to that 50x pool at 74.81. Let's go ahead into Litecoin real quick, LTC USDT. We'll just look at the Binance chart. I'll make sure everything's clear. You know, so your typical people would be drawing these trend lines, right? And they would be like symmetrical triangle, you know, what's going on here, and they would be like, you know, measured move, so on and so forth. They would be doing stuff like this on both sides to secure their, you know, continuation of your membership so they can stream from jacuzzis and whatnot. But if you go to other things, you can get an insinuation of a single side and then basically go from there. So here, let's do the trend-based fib levels. We're going to draw this impulse on the daily up to here, down to here, and within this impulse retrace is some math. So we held that 236 for a couple days and then surged up, and then we got a rejection at the 706 at 75.02. The baselines are crossing up here, so you're getting a cross up of the baselines on the daily. The cloud is still thick on the daily with the super trend on your side, so you could be continuing up higher into this region on the Litecoin asset. So coming back into some of these vectors over here on the daily time frame, you do have a fair value gap over there within this region at 81.48. And if we go into the lower time frames like the 6 hour and stuff, you got the 6 hour trend cloud on your side. One thing to pay heed to is this cross down event of the baselines and the price suppression of that 6 hour candle. Although you got a full reset of the stochastic here and the money flow and the RSI coiling up together, so it could go either way at this point. If Bitcoin plays ball, basically, and the dominance, BTC dominance, kind of currently taking a little bit of a surge as it rises up, if this holds the range and allows for the alts to play ball, basically what you need to look at for that is understanding the cycle. If the BTC dominance is increasing and then BTC decreases, then the alts will dump fast. So we want to see the dominance decrease for the Litecoin to go up, and we want it to decrease, and more importantly BTC to increase as well. So if BTC increases while the dominance decreases, you'll see that, but getting that cross up of the dominance possibly going higher. Let's see. So dominance of BTC countermines the idea of an altcoin rally. So you want to juxtapose the dominance with that. Okay, so the 6 hour time frame holding 4 hour, also nice angle to the cloud here, 2 o'clock. We're SR flipping potentially this adaptive moving average on the 4 hour here, which means if we do that and hold some candles above it, you could get that surge up that Sergio Gutierrez upside play. So coming up into this fair value gap perhaps. Now, do you have to do this math of these 3 clicks? Not really. I mean, there's some people that take this whole impulse and yeah, sure, you could put this over here and it would lead you to the promised land too, but it wouldn't tell you where possible resistances may lie. So the 786 here at 75.93, 74.86, these are kind of regions to look at. If we can't make it above here, you could have an extended M that comes down. So everything is possible and places to put your stops into profit if it were genuinely going up to this region. So just seeing a little bit of a surge up. If Bitcoin plays ball and does go up from here at least to that pool at 36,162, you could get a little bit of a scalp play for LTC. So if we go to the hourly time frame to complete the analysis, Litecoin also resetting the hourly here and getting this cloud flip potential. It is not really giving a solid angle here. It's just going sideways, but every time you hold the cloud, you could possibly be going higher. One thing to note is we are crossing down on the baselines. You don't want to play the cross down, you want to play the cross up into it generally. So this is countermining this idea of going up here at this exact moment in time. If we go to the lower time frame of the 15 also crossing down here. So these baselines are the scalper's dream because they will give you that leading idea of fatigue before it can bite you. And so you play cross up to cross down, and you can get these little scalp plays within the impulse. So you're getting this cross down event. The 15-minute is looking to reset here, and the liquidity on this coming back to some 75x long pool for the most part, but eventually looking to possibly sweep that level of shorts similar to BTC. Going to the 5-minute to look for even deeper analysis, you're getting this cloud rejection, this bearish retest of the cloud, possibly sweeping a little bit lower. You could come to this idea here and see what type of reaction sweep at 72.84. Let's see if there's a level that lines up there. 72.84. There's a $1.2 million long here at 75x. They could sweep at the low there, and they could even come to that 72.86 $3 million character within this vector here. So you want to ideally line it up with confluence similar to what we did with BTC. So for the thorough analysis, you would take this impulse to impulse. You would look for a pocket. It looks like we already came into the golden pocket and reacted off of it. So we do a deep retrace. So your next line in the sand is the 786 here. So do we have some sort of reaction off the 786 here? And then this idea can come to fruition thereafter. And that is my story, and I'm sticking to it for LTC, coming to the 786 of this impulse break of market structure, kind of put in a higher high and then retrace down. Already got a reaction off the 786 once, so it could be weak having that second reaction. So watch out for that. But possibly coming up into these regions here and see what we can ascertain from that. So that is Litecoin. Let's go back to BTC and see something there, and then I gotta take my son to school ever so soon from now. So we're getting this possible burst up into the London handoff for BTC as it wants to stay strong on the daily candle close. So we could be getting this little burst up to a liquidity zone here. Let's go say what's up. What's up, Cigna? All in 2. Let's go. Do me a favor, guys. Press that. Oh, nice. Thank you. I'm not a trader of Litecoin. HODL. Nice. Other than Bitcoin, what did you accumulate during the bear market alts-wise? Are you solely a trader? I'm a trader at this point. I lost a lot of, confidence in the exchanges and what they offer. I went through the whole meta gaming thing and a lot of false promises, fake ideas, and then when the FTX crash, I just solely look at Bitcoin for the most part, and then trade NASDAQ futures recently because of the liquidity being strong there. So yeah, just trading. It's interesting because you trade futures, it's really fast, so you have make decisions faster than Bitcoin. Bitcoin gives you a little bit more time to contemplate and possibly change your idea. Futures does not give you that luxury. But yeah, so if we go to this confluence region, do we hold this zone if we come back to it at some point? Anything in this burst up here is already too late to get in on, in my opinion. So if you're looking for a genuine idea, possibly looking into a short if you see fatigue up in this pool here at 36,160-ish. If we go back to Bitcoin here and make this Bitcoin again, to wrap it up in a nutshell and bid you guys adieu, let's go see what Bitcoin can insinuate here. So we're already at the top of this range, getting a bunch of breakout traders entering. We have that inducement idea percolating for that retrace lower on the longs. You have the tune of 4.2 billion for them to come back to on the 1 minute after possibly sweeping the 100x and 25x that they're accumulating up in that 36k region. Do they sweep up and clean up this top of this range and start to fatigue? Once again, it is midweek reversal, so changing the tune of what they did on Tuesday and Wednesday would make sense. And we did see this upside drift, and the clean non-sweep of this range makes me feel as if the play is to eventually shift to the downside here in the Asian session. And Asia is known to dump it. If you just look historically speaking, Asian range, if Asia pumps it, they pass it off to London to dump it. So if there is a pump into Asia, it's generally to fade into London. So if we do see a pump up here, look for it to fade into London is my story, and I'm sticking to it. Let's go see if you guys have anything else to share. 4 hour still looks strong. Yep. The 4 hour, so we went over the 4 hour a little bit. We'll just do that one last time. The 4 hour still has that double top potential. We were talking about the money flow back in, so that money flow disparity beneath the RSI here, this is why we overlay them. When you see this disparity between the money flow and the RSI here, you get that bullish divergence here like we had back here, and boom, in your face. So yeah, we could be seeing this disparity reclaim itself. How far does it go? If you're here for the ride and you got in somewhere off that cloud kiss or some other level you were seeing at equilibrium, then more power to you. I'm not that breakout kind of guy, so I'm not playing this, but I would be seeing where it goes from here. We got the hourly candle close. It was a blue vector volume tapering, so they could just be seeing what it does for the next hour or two. So coming up into that region, clouded on the hourly, mighty thick with that shift up here, reclaimed 50%. Technically, if I measured this, right, like if I took this candle and I measured just this candle, chances are we went to the 618 within this candle, right? No, we didn't. So we didn't do a 60% retrace. How about here? It's fun to play around with like where exactly they were aiming at in this vector, but they came to a region, happens to be the cloud. So if you're not keen on all the fibs and stuff, the cloud is one of those trend friend things. Like if you go to the short, I did make some shorts about it because I understand people are busy. So if you go to my shorts thing and just say, what is that trinity he's talking about?
What is the momentum master trinity?
It will tell you about everything,
First up is
the baselines.
Your first sign of reversal. When these cross up with price above them, upside begins. Second is the super trend. Simply put, the trend is your friend until the end. When you have the super trend on your side, continuation is probable.
And then this trend cloud.
This volume weighted formula.
So when it's thick, you don't want to play against it generally. It gives you that bounce idea.
Potential expansion or reversal is in. Don't fall.
And so, yeah, basically playing that thick cloud bounce idea is a possibility I've seen multiple times over. So yeah, that's the pump / fade into London. Are we going to get it? That's my story, and I'm sticking to it for midweek reversal November 9th. Let's go say what's up one last time. Those shorts are fire, bro. Keep it coming. Yeah, I will. I have a bunch of ideas. I have to go over Optima and a bunch, and Light. There's this new thing that I'm working on called Light. I use it for NASDAQ, but what it does here is essentially fractally shows you where the trend is continuing. If you're or fading when we can't get above the trend dots, then boom, just this showing this failure to maintain the trend, and you can see the pinging of these trend dots. It's a backtestably true thing for that. And then also this scalping indicator of the Optima, and going into the multiple time frames below the 1 minute and seeing this is what is useful for NASDAQ. So getting into that nitty gritty. I think it works on everything. I haven't really back tested it through and through, so that's why we're forward testing it, because you cannot get minute data except live. So you have to just use it live and go forward testing it into the future. But this is a cool indicator that has 5 time frames of information. It's very complex, but yeah, so we don't really go over that with Bitcoin, but we were doing it with the NASDAQ live stuff. So yeah, that's my story, and I'm sticking to it, folks. I thank you for your attention. I thank you for your time, and thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Once again, thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Trade safe. Peace.